Weakened against the dollar, the hawkish commentary that came in from the Fed meant that the dollar index gathered strength against most major currencies. As things currently stand, one US dollar costs nearly 83 rupees. Former RBI Governor Raghuram Rajan has termed the Fed's policy hawkish, said rates will continue to rise in the short term. Several investors have accused the Fed of sending mixed signals. Abhishek Datta Roy and Ritu Singh report on the varied reactions that have come into the Federal Reserve's latest monetary policy.
The Jerome Powell-led Federal Reserve pretty much stuck to the script, approving a fourth consecutive 75 basis point hike in benchmark interest rates. Their intent reasonable. US is currently grappling with a 40-year high inflation rate. However, the markets were expecting Powell to adopt a more dovish tone and hint at rate hikes of a lesser magnitude going forward, and that initial statement seemed to hint at that. It said, and I quote, "The committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments," end of quote. Wall Street started to rally, but it was short-lived when Powell took to the stage and said,
"We still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected."
We still have a ways to go. The message from Powell was clear. Rate hikes are likely to continue.
Fed raised interest rates as expected, but Chairman Powell also came in with, slight mollifiers for the market. Yes, over the next meeting or two, we will start slowing the pace of rate increases, but we're going to go higher than you expected. Because, he did say that we haven't seen much of an effect on inflation yet, and the labor market is red hot, so we need to do more. I think the one additional piece of dovishness was we don't need to see inflation come down significantly before we slow the pace of rate hikes. So that, for a while, the market took some comfort from that. But in general, it was relatively hawkish.
Stock markets went into a tizzy, and many investors accused the Fed of sending confusing signals.
Sometimes referred to the FOMC as the Federal Open Mouth Committee. There aren't many of them that are just too anxious to speak. Chairman Powell really just came out with the most hawkish position. I would call it Volcker 2.0, basically saying, we're just going to raise interest rates until we find the level that starts to convincingly bring inflation down.
Yardeni was referring to the late Paul Volcker, who served as the Fed chair from 1979 to 1987 and is widely credited to have tamed the high inflation that plagued US during that period. In fact, Jerome Powell, while speaking at a conference in 2019, referred to Walker's memoir, Keeping at It, The Quest for Sound Money and Good Government. He said, and I quote, "I actually thought I should buy 500 copies of his book and just hand them out at the Fed," end of quote. Powell also defended the actions of the Fed so far.
I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program that we've gotten this far this fast.
The key policy rate in the US stands at 3.75 to 4%. Citi has raised its expectation to 5.25 to 5.5%, hinting that there is room for rates to go up by another 150 basis points. If this turns out to be true, Standard Chartered expects the rupee to depreciate beyond 84 levels against the dollar.
Well, reactions coming into what came in from